It's good to file a tax return as soon as you can, in general. First off, it's nice to have a refund sooner rather than later. Also, in general, the IRS allows up to 3 years from the due date of a tax return in order for your refund to be processed. If you wait beyond that, it's pretty doubtful you're going to get any refund. The second reason it's good to file a tax return generally falls if you owe money. Now, not filing a tax return in the case where you owe money, it's got some of the biggest penalties that are really fairly easy to avoid if a tax return's been filed. You can always get on a payment plan if there's no money or the money's short. Also, in a very difficult situation, you could be put on hold as far as paying anything to them. It's called CNC, or currently not collectible. That's the way the IRS classifies it. But in any event, we always file tax returns for our clients as soon as possible. Everyone's situation is a little different, and if you have not filed your tax return and you are looking at some good hefty penalties, there are a handful of situations. Basically, if you give them a good reason, they may just waive the penalty. The first one that comes to mind is health reasons. What happens is, after a return's been filed, you get a letter in a couple of months and it says the return has been, you have so much penalty involved. At that time, you can write them a letter and say, gee whiz, due to XYZ health reason, here's the doctor's report, the reason that it could not be filed. There are other reasons as well, probably too many to get involved, to cover in this video, but try to get your tax return filed as soon as you can. Now, for people that don't file the tax return, and eventually, if you have income, the IRS is going to file a tax return for you. What they do is they take every item of income that has been reported to them, they go ahead through the computer, and they file the return, and they allow no deductions. And then the bill is sent to you, or the taxpayer, not necessarily you personally, but the taxpayer, and then you're left to file your tax return and deduct any deductions that you have coming. They will give you no family deductions for any family members, wife, husband, children. The typical situation, or not the typical, but the one that I remember the most, are truck drivers. Some of the truck drivers I've known, they're great on the road. Paperwork is not a high priority for them. It's rather a bit of a nuisance, and the returns aren't filed. So they get 1099s from different clients, different employers, so to speak, and their gross monies that have been received. The one I'm thinking of is the truck driver. He got $150,000 in 1099, and the IRS, he didn't file his taxes. The IRS went ahead, filed a return for him, and it was a big tax bill. On top of it, there were penalties. What the IRS did not include were the cost of his truck, which was set for depreciation, all his gas being on the road. This gentleman probably made about $50,000, so, something like that. All his expenses for meals while he's on the road. He was an overnight driver. It's sort of a special class, but this is one of many scenarios that may happen, and all of us are different in our tax return filings. But again, if you can, file your tax return as soon as you can.